Time now for an in-depth look at the market news, and for that I'm joined on the line by Dr. Kim Seiwan, Professor of Economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on.
Good afternoon, Devin.
Well, the Federal Reserve has wrapped up its September meeting, saying it's not going to raise rates before 2023 and still has some room to maneuver, apparently. What's the takeaway from this meeting?
Yes, Fed's signal from September FOMC meeting is clear and simple. They pledged to support economic recovery by setting a higher bar to raise interest rate, and they will be holding interest rate for at least 3 more years. Technically speaking, all these mean that U.S. Fed will stick to 0% interest rate even if inflation reaches 2% and the unemployment rate falls around 4%. Mr. Powell also reiterated the importance of Congress more aggregate spending to support hard-hit households and businesses.
Yeah, despite this promise of more support from the Fed, though, the markets were mixed because of uncertainty about these tech stocks. What's the story in the global markets?
Along with U.S. Fed commitment to 0% interest rate yesterday, U.S. market temporarily increased in the middle of the trading, but in the end, concerns on large capital IT corporations like Apple and Facebook have driven market downwards yesterday. Dow Jones Industrial gained by 0.1%, but Nasdaq lost by 1.3%. All Asian markets of Nikkei, Shanghai, Hong Kong had negative returns between negative 5% and negative 1.7% due to U.S. Nasdaq's large drop yesterday.
Right, and this decline has carried over into the Korean markets today, too. It looks like institutions were the big sellers today. What happened there?
That's true, Devin. Domestic market is much affected by U.S. market of yesterday. And domestic investors' understanding is that U.S. Fed's policies are not enough to support U.S. economy and global economy. Kospi dropped by 1.2%, and Kosdaq also dropped at the same rate of 1.2% today. Even though domestic investors purchased in both markets, foreign investors and domestic institutional investors' sales were stronger.
Indeed. Well, we see for the Korean macro situation, the OECD forecasting a contraction this year of 1%. That's a little lower than its previous forecast, but still this is considered a rather positive estimate, even by Korea's finance minister. What do you make of this forecast?
In its latest projection for Korean economy, the OECD has predicted that the Korean economy will contract by 1% in 2020 from a year earlier. This updated prediction marked a downward adjustment from its August forecast of negative 0.8% growth. But still, negative 1% was the highest economic growth forecast among 37 OECD member countries. The OECD also recommended fiscal policy's role in reviving COVID-hit economy. This recommendation actually in line with Korean government's current policy direction with quite a few times of the supplementary budget and much larger regular budget of next year.
Well, let's talk about oil for a minute. The price of West Texas crude is back above $40 a barrel thanks to this latest Gulf hurricane hitting supplies. Tell us about oil and your outlook for it.
Global oil price has exceeded $40 per barrel as Hurricane Sally shuts down almost 30% of Gulf oil production facilities. This natural factor increased oil price by almost 5% in a day. But oil price is expected to go back to previous $30 per barrel level as hurricane effect is temporary and demands for oil products are still weak from COVID shock.
Got it. All right, Professor, we'll have to leave it there for today. Thanks so much for sharing your insights today.
Thank you very much.